The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Let's take a look here at the DAX index. We were up against that resistance yesterday that we talked about. It sold off a bit. And if we take a look here at the FTSE, we will be able to see that we did pretty much the exact same thing. It didn't back off nearly as much, but it still backed off. Now, we did have a really really special guest today at 9:30. Bill Meridian from Cycles Research will be our guest, and it will be always a lot of fun listening to what Bill has to say. Folks, there's a couple of things that are really important to cover this morning. One of them is in the euro. We'll just get this up here, and the corresponding part of this will be the DAX index. Just a second. I'm going to do let's do the short-term version first, and then I'll do the longer-term version. That way I won't get too confused. Oh, dear. Hold on a second. Oh, it's easy to get confused these days. 1 second here. Okay, there's the euro on the 15-minute chart. And if it gets below 120.10, folks, that's going to be pretty nasty for the euro. Because if we look at this euro on the daily chart, you'll see that we're right here with these three major ratios coming together at the 120.30 level, and we're trading at 120.30 right now. Our low's been 120.20 or 120.15. So any new low from here would certainly make this look very, very suspect and take it down, at least another 60 or 70 points down to the 61% retracement, down at the level of 119.60. So pay very close attention to that. We're seeing the same thing happening in this U.S. dollar index. This is doing the exact opposite, of course. We had that beautiful candlestick. Oh, gee whiz, these charts are just going crazy on me today, boys and girls. Hang in there with me, and we'll get this thing straightened out so we can take a quick look at it. And remember, when the euro is weak, the gold is weak, and that's why the gold is broken down to this level that is they actually run this 1310 level. Anything below that on a closing basis is telling you we're going down to that 1285, most probably. But I'm trying to find the dollar index chart. If you'll bear with me here 1 second, hopefully I will find it. And I did find it, so give me 1 second. Oh, gee whiz, these things I'm having a rough time, folks. Hang on here just a second. I'm trying to move the cursor so that I can put the chart into the window, and then when I release it, it did it again. Doggone it. What am I going to do? Shucks. Hold on. Bear with me here a second, and I'll try one more time. And if I can't, then I'm just going to forget it. Just move it over here. Okay, I think this is going to work, hopefully. Just give me 1 second here. And shucks. Something's wrong. Just a minute. I hit it this way, and then I go there. That should do it. There's the dollar index. You can see here that we've backed off just a little bit, and we went right back up to that 92 level in the dollar index. And, we are getting ready to, looks like it's going to go higher. Now, just 1 second, folks. There's a lot of things happening today. And I'm sorry if it's the wrong screen. Time out. I'm getting a little confused. And at my age, all my beepers are going off, so please bear with me here 1 second. Hold on. It wasn't the dollar. Let's try it again. All right, we'll click it again. Put this here. Put this over here. That should be the U.S. dollar index in there now. If it's not, then there's trouble in there's trouble in River City, I would think. So is the dollar index chart? There's a big problem then, because I'm posting what chart is being posted. I hope it's Oh, you know what's happening is it's catching the picture of the whole screen. Oh dear. All right, just 1 second, folks. Let me get back to. I'm not going to post any more charts in here. I'm doing something wrong, and I don't know what I'm doing wrong, and it's a little embarrassing. So I haven't had this happen in 10 years that I've been doing this stuff. So I am going to defer to. Oh shucks, hold on just a minute here. I'm going to defer to putting up charts here for a little minute, for a bit here, and just try to talk to you about the thing that's going on in the Treasury bonds. And it's very, very important because this thing, I see what's happening in the bonds. I'm doing the exact same thing that I usually do, but it's not doing it the way that I usually do it. See, ordinarily, I just take, oh, I know what to do. That's not it. Just a second. I know how to do it now. Hold on just a minute. Well, I see what I did wrong. I'm sorry. I see. Here, I got it right now. Just a second. There we go. This will be right. There's the dollar index. You'll see that we've got above the 92 level. That broke above that 1.618 expansion. It takes it up to that 92.30 level, but that euro is the one you want to be watching. You want to be watching a senior moment. I have senior moments every day of the week. Let's take a look here at the interest rate market, folks, because something really big is happening over here, and I think it's relatively important. Give me a second here, and we'll bring this chart up to take a look at it. This is the high-yield bond market. As you can see, this is the junk bond market. You can see the head and shoulders pattern that was there. You can see the sell-up, but look what's happened since February, folks. Look at this massive divergence. People are going into junk bonds to get the higher interest rates, whereas the notes and T-bonds are going lower. This is really negative. I mean, people are going after yield, and they should be going after safety. Remember what Bernard Baruch said, don't be concerned on the return on your money, be concerned on the return of your money. And junk bonds, you know, they're yielding 7%, but a lot of those, you know, some of them don't pay off, but sometimes they do, but that's neither here nor there. So pay attention to that. I think that we've had a pretty good rally here in these notes. We got up to almost this 144 level, which what we thought was going to be our maximum level in the June Treasury bonds, to see if they were going to hit that level. But so far, the high has been 143.16. They still look very bearish, and we'll see if that's going to happen and turn the market to the upside. Now, another one that we're at a very critical level on, of course, is the crude oil market. And we went up and we tested that 68 level a barrel yesterday. We've been there 3 times now. Let's try to get this one up here so we can take a look at it. I see what I did wrong here. 1 second. We went up to the 78% level and stopped spot on, and then turned right back down again. We hit the 61% retracement 3 times on the downside. We hit it on the 23rd, the 25th, and yesterday. And now we had a rally up to that 78% level. We actually hit $69 a barrel on a fast tick, but then it moved, you know, substantially lower from that level. So we're going to take a little break here, and when we come back, we're going to talk a little bit about the semiconductor index and what it's been doing since the election night. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. I've posted a chart from one of our friends from across the pond. It shows the semiconductor index has gone up 3 times since the election night. I mean, that's much, much farther than we had in any of the other markets. I just bring this to your attention because it does have a slightly bearish topping pattern that we see happening right now. Now, the next chart that I wanted to show you, folks, if you'll just give me 1 second here, is this stock market, and this is pretty much where we are. We did the same thing yesterday that we did the day before. We went right up in the S&P to that resistance level that we talked about as the market was opening yesterday at 2282. We then broke down to 2249 in one day. The Dow Jones Industrials made the exact to the tick 78% level at 24,450, I believe. That was on the air when we were talking. We brought that to your attention, and it was also during amateur hour, which is the first hour in the morning, the first 45 minutes to 1 hour in the morning. And of course the market reversed. It doesn't always do that, but it did that yesterday. But if you take a look at this S&P cash, which pretty much describes what's happening in all of the markets. The NASDAQ, the S&P, the Russell, all of them are doing the same thing. They have lower tops, lower bottoms. That's the definition of a downtrend. And it gives a price objective of about 10% lower into May. Now, an interesting statistic has just been posted on CNBC this morning, and that is that the sell in May and go away seasonal that they've talked about for over 100 and some years in the stock market has not worked since 2012. That was the last year that it worked. So you've had 13, 14, 15, 16, 17, 5 years where that seasonal didn't work. Okay, well, the first thing you'd want to do is to go back and statistically ask yourself, how many times has it happened that the seasonal has not worked 5 years in a row? And the answer to that, folks, is the pi. It's a 0. It's a nothing. I mean, it's never happened before. So maybe this will be the first time that it breaks it. Maybe not. All I know is I bring the statistic to you to pay attention to it. But remember, we are in a downtrend this year. We're not in an uptrend like we were from 12 2012 through 2017. We're in a downtrend for the last 4 months. You cannot deny that. You have lower tops, lower bottoms. That is a downtrend. There's no other way to describe it other than that. So pay attention. That's all I'm going to say. We're going to have Rich Anderson as our guest tomorrow, God willing, and I think she is. So we'll hopefully have him on to talk to us. And we certainly enjoyed Cy Monley yesterday, giving us his perspective of what's going on. Folks, I want to talk a little bit about junk bonds because I heard Tom O'Brien chatting about it. And that is, I don't know if you folks have ever read the book, The Den of Thieves, by James Stewart, but it's really the story of Drexel Burnham Lambert and how the junk bonds got started. Milken was doing his program for his MBA in at Wharton School of Business, and when he got out, he approached some Wall Street firms to try to convince them to change the name of junk bonds to high-yielding bonds. And he made a great presentation to Drexel Burnham, and they hired him. He went to Beverly Hills in 1973, I believe, 73 or 74, and he started his program, and he became one of the richest and most successful people on Wall Street. Unfortunately, he got involved with some shady dealings of himself and some other people's that were involved there, shady characters. If you really want a good book about it, it's called The Den of Thieves by James Stewart. James Stewart is still a regular guest on CNBC. He's a New York Times financial reporter, but he does really good work. So if you get a chance to read that book, it's certainly great. It's actually, there's a picture of my office on the back side of that, or in one of those pages in the book. You can see the window where the office was. Anyway, it's a great book. But basically, it was a different time. And one year, I believe it was 1977, Mike made more money than McDonald's. I think he made $555 million that year. And that was absolutely unheard of. And that was the start when his ego got a little bit inflated, and it certainly went up, went up a lot higher. Let's take a quick look here at this gold market, folks, because I think that we are heading down to the 1265 level. That usually means that the euro is going to break, so we need to be watching it. Wait a minute. Well, you know what? Steve is saying that that's not right. I didn't check it, Steve. Thank you very much about that. It said CNBC, the last sell in May that worked was in 2015. Well, the guy that was on said 2012. I don't know if you were watching it. That's what I saw. It might have been a 5 or a deuce. I don't know. But anyway, that's probably right. 5 times in a row. You're right, I should turn CNBC off. That's correct. I usually watch Bloomberg, but for some reason I was not watching Bloomberg. Anyway, we'll see. I don't do seasonals that much. If you want to learn seasonals, the best guy in the whole planet for seasonals for commodities and stuff is Steve Moore out of Oregon. He's a great guy. I've tried to have him on the guest, but he's just too busy. So I just wanted to let you know, if you ever go up to see him in Oregon, he has his family's charter of where he got his the property in the 1860s from the family where they homesteaded it, and you'll never guess who signed it. It was signed by Abraham Lincoln. Now, this is not the original Abraham Lincoln signature because they keep that in a safety deposit box, but it's a copy of the actual deed that Abraham Lincoln signed. So he goes back a long ways, but he really does great work up there in Oregon. He happens to be a good friend of Jim Twentyman, who we all know here. I'm going to have Jim back on again to talk a little bit about some of these markets because he's pretty good at doing some of these things, and we'll give him some ideas of working with W.D. Gann and some things like that. We're at some critical levels here in the S&P and also in the Dow Jones. We're right down at the 61% retracement in the S&P at this 24,050 level. In the S&P, doggone Larry, wow. in the Dow Jones Cash is at the 61% retracement level. The retracement level for the 61% retracement in the Dow E-mini, I believe, comes in at 2639. Somebody check me on that, because I'm watching the Dow right now, and that's what I'm seeing at that particular spot. So kind of watch it anyway. The Nasdaq, I haven't even checked it for a while, because it's getting into a different era altogether. The Canadian dollar, someone's asked a question about that. We had a little bit of a rally this morning. Now we're backing off. We're down a little bit on the day, which is what we're expecting, and we'll see how that goes. We got the gold trading at 1308, folks. This thing looks like it wants to go a lot lower. I really look to buy it about $25 to $28 lower, down around that 1285 level, and we'll see if that's going to hold. But right now, in fact, look to short it. Yesterday, you had a beautiful short. You had a 61% retracement the previous day at 1322. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and as the luck of the draw would have it, we have some technical problems getting through to Vienna, Austria today, so I'm going to have... Oh, Bill, you're there. How are you? There you go. How are you, my friend?
I'm right here.
Good. Well, I wasn't aware of that. I'm awfully sorry. I'm not going to use that as an excuse, but I'm having a little bit of allergy. I'm going to let you go ahead and start the program. I've got your first chart posted up there, so I think if you take a look at it, we're going to start with the bonds being oversold rally. Which chart would you like to start with? Well,
let me just go over the slide
okay.
number 2.
Okay.
Bonds, I'm still bearish on bonds, but they're in an oversold rally. We'll see that as we progress through the charts. Stocks, well, when I originally wrote this, I thought the market would be up this week, so yesterday caught me as a surprise because we are in the end of the month period of seasonal strength for April going into May, and that expires on the 4th. And plus that, we have an FOMC meeting. I think it's today and tomorrow. That has a bullish bias. So I projected a high on the 4th and a decline into mid-month, and then gold is just stuck in a trading range. We'll look at that. I don't know what's holding oil up because the cycles are topping, and of course the dollar rally I had talked about before. We'll just review that. And there's a new book coming out. So if you want to go to slide number 3.
You betcha.
Slide number 3 is the S&P cycle projection, and as you can see, it expires later in this week. So not only does the end of the month strength period terminate for April going to May, but we have the cycle topping, and we also have a projected turning point, and we've also got the FOMC meeting. So I roll that all up and call it a rally for this week, so perhaps we'll recover today. But then you see a sharp slide, and we have another turning point around the 11th. So somewhere around the 11th to the 15th, I think the market will bottom. If we can go to the next slide. This is the monthly S&P cycle, and here we see a low around May 14th. So hopefully this will be the last drop, and I don't think we'll go below the previous 2 lows. We've already made a low, rallied up, hit the low, bounced up again, and here we're going down again, but I don't think we're going as low as we did the on the previous 2 declines. So if you want to progress one to bonds.
Okay. You betcha.
Now, when I say an oversold rally, you can see that is the daily 10-year note. As you can see, it's going straight down, and it rallied up. And as I said, it was not going to break through that resistance line with the cycles turning down. And we can see the steep decline. But now you can see that it's gotten so oversold and so below the trend line, you have to have some return to the mean. So we've had about, I think after yesterday, 3 days of rallying from that low. But I don't think it's going above 120, so I'd be shorting it again when it gets up to 120. So at the moment, it's in a bit of no man's land, no person's land, I should say, I guess.
Okay.
And if you want to go to the next one is.
But Bill, we have a question about junk bonds. Do you look at junk bonds at all in relation to the others?
Yes, I do, but I didn't prepare anything to say. So
okay, it's not a problem. And someone will just ask the question, and we'll just move on. That's all right. We'll move on to the next one, which is our notes. Okay.
This is the average month of May from 1982 to the present. That's what the average month looks like. And you'll note there's usually a low around this May 14th. So there have been more lows in the month of May than any more highs in the month of May than any other month, and more lows in the month of June than in any other month. So we're in a very volatile period. So whereas it is very uncertain and dangerous, it can be very profitable to trade. So after May 14th, I don't think I'd be short the bonds, because usually you get a pretty good rally May into June. But then June, next time I'm on, there's one period there that's absolutely deadly. I should have put it in here. Which is one of the weakest times of the year. And then the average low for the year is around the 23rd of June. So last year, this, of course, 2016 and 17, that did not hold bonds up, which is confirming that it's in a bear market. But you don't want to be short over the short term, I think, after May 14th. And then I think you can return to a short position, and then I don't think you want to be short after June 23rd or so. So if we go to the next one.
You betcha. Hold on one second. John, Bill, what is the area of Hofburg? Is that around the old palace there in Austria?
I'm sorry, you're asking about...
There's an area of Vienna called Hofburg. Is that where the palace is?
Well, there was the really big palace with the park. That's it. Yeah.
Oh, okay. All right. I was there once. I just remember if that was the place. Okay, we've got the monthly note cycle up. Oh, that's the one we had before. I've got to move it down 1 second. This is. There we go. Get it up here. Sorry, Bill. There you go. We're looking at the weekly seasonals now. It's in Chinese, Bill.
J-Stock's monthly note cycle?
I'm reading the thing and I can see the little brackets and I thought it was Chinese. I don't have my glasses on. Sorry,
okay.
Bill. This is a rough show for me today, so you're going to have to bail me out. We're in the weekly seasonal period, so go ahead.
Okay, this is Edward Productions today.
Yeah.
Okay. The monthly note cycle shows a low right around May 19th. So, again, after that date, I mean, if you look at the previous slide suggests a low on May 14th. This dynamic cycle suggests a low on May 19th. So I'd have all short positions closed out by May 14th. I just think we're going to get a rally back up to that line at 120 on the U.S. 10-year, and then we'll decline again. And then after that, I think it's up into June, and then we get a very sharp decline in June. And after that, we're past the seasonal low for the year. And if you go to the next slide, which is number 8.
Uh-oh. Now I'm on number.
In terms, its notes are in a week seasonal period with the red histogram.
Yeah, that's the 8. Okay, just a second. I was one ahead. Boy, this is really a good day today. Hold on a second. There we go.
Well, here you can see we've just come through the weak part of the year, February through June, and look at July, August. So this is why I'm saying that I would not want to be short past the last week in June, because as you can see, July and August are seasonally very strong, although that will of course be reduced in magnitude in somewhat of in a bull market. I mean, in a bear market, they will be reduced in magnitude because these readings are from 1982, which encompassed almost all bull market readings.
Mm-hmm. Well, the long-term chart on the bond sure looks negative, that's for sure.
That's always in the back of my mind, yeah. So can we go down one?
You betcha. There we are.
Now here you see that support has been broken. The support that was around 123, and that was back in beginning of the year. No, that was back. Excuse me, that was back in 2014. That's been broken, and the dashed line you see, the vertical blue line, is actually the 23.6% retracement of the entire bull market. And you see an uptrend line. So that's how I get the 118 objective.
Okay, we're going to take a little break here, and we'll be right back with Bill Meridian of Cycles Research, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're chatting with Bill Meridian of Cycles Research. Vienna, Austria. Bill, we're looking at the U.S. dollar index cycle, and boy, you certainly nailed this one spot on. It's just screaming today. So what's your feeling here?
Yeah, well, this is, it's amazing, Larry, is that nobody else saw this. Because I read other letters, and there are a number of sentiment indices that are kept, and they haven't moved off of bearish yet. They're still overly bullish for the euro and overly bearish for the dollar, despite the rally, which is quite remarkable.
Yep.
And let me just move down to that page. And yet this cycle just goes straight up through the year. And I'm equating the length and the strength of that cycle with the sentiment. I'm saying what's going to take it, what is it going to take to move these people to bullish on the dollar?
This would be
yeah.
This would be negative to inflation, though, wouldn't it? Wouldn't that be deflationary with a really strong dollar?
I think that there are many factors that affect
that's
currencies.
true.
And I think one of the reasons is they're going to recognize the U.S. has the strongest economy due to the change in administrations, and they're also starting to see the administration as militarily strong. And where do you want to park your assets when the world looks uncertain? Because I know, as I mentioned to you last time, my trip to the UAE is they're having trouble attracting investment because everyone's so worried about Iran. And as I've been saying all along, you might remember this, I didn't think North Korea was the issue. Their horoscope looks terrible, and I'm not surprised by what is happening. And I think Iran is the real problem, number one, and the South China Sea is number two. And I think maybe Russia's number three, and Korea's way down on the list.
Yeah, it certainly looks that way. Now, Bill, we have a question from one of our listeners. Is your real name Meridian, your last name Meridian?
No, it's Sarubbi, S-A-R-U-B-B-I. But the reason I adopted a pen name was because when we first worked on the very first software program way back in the early to mid-'80s in New York, I was with PaineWebber, and their house rules prevent me from getting into any other sort of business. And I had predicted that I wouldn't last there, and they would keep my boss and let me go in any downturn, and of course I got that exactly right. And I started promoting the software and cycles research before I left PaineWebber, so I used the pen name.
Yeah. Well, I've known you both ways, and Bill, you haven't changed much. You're still as good as Sarubbi as you are with Meridian, so you're a class act. Let's talk about this next cycle, which is the euro. That's just basically the mirror image
the reverse
of
of
the
the
dollar.
other one.
Yeah, it sure is. Yeah.
Now from this, you can come up with, much information. I was pounding the table on this, and some Elliott wave friends whom I respect were saying, no, there's got to be one more, a fifth wave drop. And I said, yeah, but in a very strong uptrade, can't fifth waves fail or be truncated? And so that last decline, when the DXY dropped close to its previous low, I think that one was it. That was the fifth wave. And so from this, you can conclude that gold doesn't look very good. Yep. And you can also interest rates are going up. That's another reason that that you would want to hold the dollar. And you can also conclude that the pound, I think the pound is next.
Yes, we got the pound up next, and I'll put it up right now. And that's also had a pretty good move to the downside already. And it hasn't even hit the peak point. So now the reason I'd like to speak about the reasons for that, it's these valuations are comparative, these prices, and there are a series of eclipses coming up. If you trace their history, in the past recurrences of these eclipses in 018 and 019 and 020, there were problems between England and the continent. From history books of Europe, how many battles they fought, and 100 Years' War, the 30 Years' War, and 1066 Hastings. So are they going to fight battles? No, but look what's happening. England is trying to extract itself from the EC, and they're meeting with a lot of resistance. So that these old historical cycles are manifesting as England trying to leave the European Union. These cycles appear very difficult right through the end of next year. So what does that tell you? It's going to be easy for them to extract themselves? No, and I don't think it's going to be easy to form a coalition government in Germany either, because there are a lot of German cycles. So I'm taking old cycles of continent German conflict with the British Isles, and I'm projecting them forward and saying it looks like this is the reason for the decline in the euro and the decline in the currencies. Mm-hmm. That makes very good sense, and it's certainly working that way, that's for sure. Now, the next slide has a link in there from Forbes. Did you want us to post that link?
No, I just wanted to say that under the Bill Cerubi name, I write Stocks This Week, which I'm going to go over with you. That is the latest link if you want to look at it. But it's there every Sunday. Every Sunday it goes up between 11 a.m. and 12, unless I can't get out of bed or something like that. But that's there. But anyway.
Go ahead. Are you still there? Uh-oh. Technical problem, I think, boys and girls. Earth to Bill, Bill to Earth. Looks like we've lost a connection here, folks. I don't know what's happened here, so we'll just keep on talking to see what's going on, and we'll see what's going on here. Let's take a look at this Nick chart that Bill is talking about. It looks like a cycle for Apple. And it looks like Apple is going to be bottoming sometime in early May, and we'll see if that's going to be the case. I should allow him to talk about that. Evidently, we've lost the connection over there, to across the pond, but we'll hold off until he comes back on. And what we'll do is we'll take a quick look at this euro and the U.S. dollar, because we've been talking about this for quite some time. We've been quite bearish on the euro for quite some time, and what it's done is, you notice we have broken through this major resistance down here at the 120.50 level. We've now broken through the 120.30 level. That tells us we're going to go down to at least the 78% level of this, which takes it down to 119.60, and that even looks lower than that. And the pound, of course, has been incredibly bearish for the past several weeks. Those of you that follow the 24/7 newsletter, we focused on that treasury, or the bond, the British pound, several different ways. And one of the ways we, of course, looked at it was on the weekly chart. And as you can see, it's had a pretty big break, on the weeklies. Now, we've also had a couple of questions
Larry,
about...
I'm back.
Yeah, there, that up, boy. The bill's been paid, and we're back in town. I've got the chart of Apple up. You want to go through that one? Yeah, go ahead.
Well, yeah, I'm just saying it's rallying probably through the end of the week, and the buy signals have been 100% accurate when we got the call was dropped. Now, if we go to the next one, that's Vertex Pharmaceuticals. Also, it was a little lower yesterday, but it still tests out real well. And the third one is one that seems to just go up, and that is Visa.
That's
so both Visa and
credit
Apple
cards,
were
people.
up. yesterday, despite the decline in the market.
Okay. Now, what is this last thing about this ACG map? I don't know what this means.
This is Donald J. Trump's astrocartography map.
Oh, we got to pay attention to this one.
That is his horoscope. There's a way to do this for anybody. Computer programs do it easily these days. But you'll notice I have an arrow pointed to that red thing. That's Mars on the midheaven. And what city does it run right through? Moscow.
Oh, dear.
And
hey,
Jupiter,
stay with us. We got to pay a few bills. Can we finish this up in a few minutes, Bill?
Sure.
Please, yeah. Okay, we'll be right back. Bill Meridian, Cycles Research, 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back talking with Bill Meridian, and we've got Donald Trump's astrocartography chart up. You want to go ahead and talk about it, Bill?
Mars line, as you can see, the red line runs right through Moscow, and if you run that down, you'll note it runs, I believe, directly, it runs through the Middle East. So it indicates the areas that will have problems are the Middle East and Moscow, but the Jupiter line, where I have the black arrow to the right, that runs right through the heart of Russia, but also through China. So that indicates he'll be fairly successful with any of his Chinese policies. And if we go down one more.
Oh, this is really, I like these charts. Hold on one second. Well, I like all of them, but I like these. Hold on one second. There we go. This is the Korean peace treaty chart.
This was just signed. In fact, you could see the guy's watch as they're signing it. His watch was pulled up. Let me see if I got this right. 5:59. Maybe that should have been 17:59 because I don't think there's a PM in here. But anyway, it was born on a Mars-Pluto conjunction, and when that gets set off, which it will sometime in the next 2 or 3 years, I don't think this is okay for now, but I don't think this treaty will last.
Uh-oh, well,
but
that's
I
pretty
just
tough.
wanted to say, you know, they recorded 2 seismic events, one at their mountain facility where they do the rocket research, and the other one at the nuclear reactor site as being minor earthquakes. Well, my intelligence friends up in England say that those might have been cruise missile strikes, and everyone's agreed not to talk about it because everybody wants this guy out of business. And if they don't say, if they don't say anything, he'll save face. Or they had some sort of Chernobyl-style accident and the mountain collapsed on itself, but basically has nothing to threaten us with.
Let's talk about your book. Let's talk about your book.
This will be available in a couple weeks. Mastering Geopolitical Prediction: Applied Mundane Astrology.
Okay. And I'll put the link up so where we get it. When the book is ready, we want to have you back. We want to have you back on, though. Can we do that?
Okay.
Soon as you're ready. Okay, Bill, thanks for joining us, my friend. Have a wonderful weekend, and we'll talk to you in a few weeks. Yeah, may God bless. Bye-bye.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!